Shares of Home Depot and Lowe's both trading lower. They got hit with downgrades at Oppenheimer to outperform. The firm says the valuations might not reflect the real challenge facing home improvement retail, but adds there will be better entry points ahead. Here's the analyst behind that call, Brian Nagel. Hi, Brian.
How are you?
Let's talk a little bit about Home Depot and Lowe's. As a customer, they are brands that I know very well. Why are they so challenged right now? What about the current economic environment is providing such a challenge?
Yeah, Kirk. Well, I mean, look, I think it's always smart to start any conversation on Lowe's and Home Depot and just talk about the underlying quality of these companies. These are very well-run companies, and over the longer term, very well positioned in what I view as a healthy sector. My concern and my reason why downgrades today is that we're still in this softer demand backdrop. Okay, and there's a lot of factors that contribute to this. I think one of the biggest remains a pull forward in demand into the pandemic. So we're sort of feeling the after effects of that. And we've obviously still have higher rates. Hopefully they're going lower, but they're higher at this point. So all that's contributing to what I think is still a weaker demand backdrop and then hence weaker sales at Home Depot and Lowe's. I'm looking at these stocks. They've had nice moves up. They've traded multiples that are now pushing towards recent peaks. And I think that's where they're vulnerable here in the near term.
You've also lowered your price target. So, for instance, Home Depot, your previous target was $360. Now it stands at $345. And Lowe's, you lowered that from $275 to $230. Are those, if those price targets hold and the share price gets to that level, are those great entry points for investors?
Well, I think they're getting there, right? I mean, I think that's where the stock starts getting more interesting. We also, as part of the work that we published this morning, introduced what we call downside support levels, which would be, again, below those price targets. And that's where I think the stocks get really attractive, all else the same. Meaning that if we look at, if they were to hit these type of prices, okay, that means that they're trading at trophish multiples on cyclically depressed earnings, and then all else the same, you start buying them. So, but again, the price targets gain there would be a starting point to make them more attractive here near term.
Let's talk a little bit about what you see for earnings, and you've lowered those forecasts as well, not by a ton, but by a meaningful amount. What would have to happen for earnings to start going the other way? And I guess behind that question is the idea that if these are not attractive prices to buy or own right now, might the companies look a lot better 3 to 5 years from now? In other words, are they long-term winners in your view after they get past this decline in price in your view and decline in earnings?
Yes, let me answer the second part first, Tyler. Absolutely. These are stocks, I think, longer-term investors. Long-term is not a perfectly defined term.
No.
Okay, but 3 to 5 years, absolutely. I mean, like I said, these are very well-run businesses, and the home improvement sector in the United States is a very healthy sector. And both Home Depot and Lowe's essentially dominate that sector. Long-term, they're attractive. Now, in the near term, though, we're just in this malaise.
Yeah.
We saw this through 2023. Okay, again, like I was saying before, it's a function of a pull forward in demand, higher rates, other factors. And my concern here is that just because the calendar shifted over to 2024, we're not going to get this immediate switch, if you will, to stronger trends within home improvement. I think it's going to take a while. I think it's going to take maybe till later 24 into 25 to start seeing some noticeable improvement. And that's at odds. If I'm reading sentiment correct, that's at odds with what the market is thinking right now.